Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by David Jane, manager of the Miton Cautious Multi-Asset Fund, to give his three sector picks. Hi David.
Good morning, Emma.
What's the first sector today?
Let's talk about emerging markets today. For the last 4 or 5 years as a fund, we've had very little exposure to emerging markets, but more recently we've introduced that exposure again. Two broad-based reasons to support that. Firstly, emerging markets have largely been held back by the slowdown in China, the weakness in the resources sector. Many of them are very dependent on those two areas. And broadly, I think it's fair to say the slowdown in China has slowed and the resources decline has declined. And therefore, those two big negatives are no longer faced with. At the same time, you've always had the strong underlying demographic growth in those emerging markets and the dynamism of those emerging markets. So again, that's an area now we can look at again, and we've been introducing Southeast Asia and Latin America back into our portfolio.
Emerging markets seems to be a real divider at the moment. There are some people who are saying, you know what, they've been beaten down, you've got some quality assets that are cheap, and you've got other people that say China has further to slow. Look at what China did last summer as an example of kind of they're not, you know, ready to enter the global market. Where do you sit on those sort of positive, negative?
Well, broadly based around China, we wouldn't say we're positive on China. We have no exposure to China, but I think it's reasonable to say that their stock market collapse has largely played out. You know, we saw a classic stock market bubble with a classic bursting of that bubble, find a level, stabilise. Here we are now, you know, largely 6 to 8 months beyond the bottom. And it looks quite economically, again, okay, you can be cynical and say they're embarking on the old policy of export-led infrastructure investment, capital investment-led growth. But that's sort of fine. You know, we don't have to invest there. We can look at emerging markets with strong domestic spending, such as India, largely independent of China, the Philippines, other parts of Southeast Asia and Latin America, where their growth patterns are independent of what's going on in China.
And what's the second sector pick?
Let's talk about US corporate bonds. We've had a period now of broad intervention in UK and now in Europe as well with quantitative easing, extraordinarily low government bond yields, which means now the yields on European and UK corporate bonds are now looking so absurdly low. There's little opportunity for capital gain and very little yield either. At the same time, if you look over in the States, we've got a relatively strongly growing economy, relatively high government bond yields, which the corporate bond yields are based upon. So we can still find yields of 4 or even 5% in corporate bonds in the US with a benign economic background. That looks dramatically more attractive to me than what I see in Europe.
And your third sector pick is one that's favourite with our readers, and that's gold, isn't it?
Yeah, we always need to talk about gold, don't we, in a mixed asset portfolio. There are times you wonder why you own it, and there are times you think, that's why I own it. And in this period where we've had massive government intervention in the fiat money markets, you know, in the trust-based markets, can we really trust money? Clearly we do. Those times when we don't, when we think government intervention is going to break down, maybe inflation is going to come back, we have our ultimate insurance in the portfolio in the gold, and we're very grateful for it at the times when we're grateful for it. And the rest of the time we forget about it.
David, thank you very much.
Thanks very much, Emma.
This is Emma Wall for Morningstar. Thank you for watching.